Canadian government is at it again. They are announcing a new secondary suite program for those looking to add another rental unit to their property. Let's break down what was just announced and why this could be a benefit to homebuyers if they are looking to add secondary or even third or fourth suites to their current property. I'm Ouzas. I'm a realtor here in the city of Toronto. Here in Toronto, we do have plenty of homes that do have the option to add a garden suite or secondary suite to their current properties. If you want to take a look at what's currently on the market, you can click on that first link in the description down below to discuss what those options look like here in the city of Toronto. It's been quite the month for the government of Canada as they've announced yet another change when it comes to the mortgage rules and how this could affect you if you are looking to add a secondary suite to your property. If you go right to the Canadian government's website, it says Deputy Prime Minister announces new actions to build secondary suites and unlock vacant lands to build more homes. For today, we're just going to talk about the secondary suite component for this video. And as a side note, they did talk about this way back in April. However, this is the first time I've heard about it since that announcement months ago. We will go through the technical guidance where they're offering mortgage refinancing for homeowners looking to add secondary suites to their home starting January 15th, 2025. These mortgage insurance reforms, as well as the forthcoming Canada Secondary Suite Loan Program, which still waiting to see all the details on that, will make it easier for homeowners to convert an unused basement into a rental apartment or a garage into a laneway home to increase density in our communities. Secondary suites can help homeowners pay their mortgage with a new rental apartment and bring families closer together. Here's two pieces is that they're allowing refinancing of insured mortgages for secondary suites to let homeowners access the equity in their homes to finance the construction of secondary suites. Borrowers will be able to access financing of up to 90% of the home value, including the value added by the secondary suite to amortize the refinance mortgage over a period of 30 years. This is really interesting. And the reason this is interesting is because typically if you are refinancing your property, the lenders don't usually go up to 90% loan to value. And if they're going to be factoring in the value that a rental suite would add to a property. So for example, if you're looking to build a laneway house, those laneway homes range anywhere between $400,000 to $600,000 as we discussed in a previous video. That would significantly add value to your home if you are adding that to the property. Keep in mind that's also a extremely high cost when it comes to adding a secondary suite, and it would take quite a bit of rental income to have any effect where they're talking about paying down your current mortgage. However, the other option is to add a basement suite, and if you do have a basement that has the height and has the appropriate sizing that would allow you to add a rental suite, that could be a great option and definitely not as expensive as building an entirely new structure. The other piece of it is to increase the mortgage insurance home price limit to $2 million for those refinancing to build a secondary suite to ensure homeowners can access this refinancing in all housing markets across the country. So I'm not exactly sure if this means that they're going to expand that limit of $1.5 million, which is the new mortgage rule that's coming in, up to $2 million. If you can show proof that you will be adding a rental suite and what that would do for the value of the home. So that will remain to be seen as we move along. Here's the parameters for this program from the Government of Canada website. So the measure will apply to all borrowers seeking to access mortgage insurance in Canada to add more units, secondary suites. These borrowers must satisfy the following requirements. They already own their properties, which is interesting. So if you are looking to buy a property, you can't take advantage of this setup until you actually own the property. So if you bought today and closed in December, for example, would that apply to January 15th? I guess it would if you do own the property. However, that being said, you may not be able to take advantage of the December 15th rule on a lower down payment up to that $1.5 million range. So that'll be interesting how that plays out. The borrower or a close relative are occupying one of the current units, intend to construct additional units, and the additional units must not be used as a short-term rental. Refinancing, insured refinancing will be allowed for the purpose of building an additional suite. What they're saying here is that you can refinance, and if it's under 20% down and it's insured, it is allowed for the purpose of the purpose-built rental. Legal units, the units must be fully self-contained units, basement suites with separate entrances, laneway homes, and meet municipal zoning requirements. Number of units, maximum of 4 dwelling units, including the existing unit. Maximum property value limit. The as improved value of eligible residential property property against which the loan is secured must be less than $2 million. This is a really interesting one because in the city of Toronto, typically the properties that are fully renovated have a basement suite and or a laneway suite are much higher priced than $2 million. If you are looking for a detached property in any of the prime areas in the city, you may be able to do this with a semi-detached property in and around that $2 million mark. But if you are adding the laneway suite, it will surely get over that $2 million mark in those prime areas. So this will be interesting to watch as we move forward. Maximum loan to value limit, as mentioned, 90% of property value, including the value added by secondary suite in combination with any other outstanding loans secured by the property. Look forward to seeing how lenders will go forward with this and what the mortgage brokers discuss on how this will be applied as we move forward. Maximum amortization, 30 years. This last piece, additional financing must not exceed the project cost. This one's very interesting because I find it very hard to know what that cost will be moving into the project. So you can go on to, for example, lanescape.ca, and I know they have prefab models and they have a structure where they will give you all the plans and everything for a set cost and generally have a really good idea of what those costs should be when constructing and building the new dwelling. So for example, if you're looking to add a garden suite or a laneway suite, a company like Lanescape would have those plans and have a good idea of the cost. And I'm not sure if you can take that proposal and take it to a mortgage broker, for example, and that's where they can set what the new refinancing would be so that you can get the money to actually do that renovation. And I'm also not sure if you go over those costs, if they will give you more funds or if you have to pay out of pocket from that point moving forward. That will remain to be seen as well. And if you have any insight onto this whatsoever, drop a comment down below. I'd love to learn what exactly those terms look like. Effective date, January 15th, 2025. All other eligibility criteria for government guaranteed mortgage insurance will continue to apply. That's the new announcement where it comes to refinancing your property in order to pay for a secondary suite on your property. I'd love to hear your thoughts and comments down below. And if you've gone through this process, definitely chime in so we can all learn what exactly that looks like when it comes to building out a secondary suite somewhere on your property, either on the laneway, in a garden suite, or basement apartment, or even just converting it into a duplex or triplex. I'm Michael Ouzas. Thanks for watching.